Ready.
Welcome, everyone. We are ready to start our live tonight. Tonight, for those of you who are joining us, we are talking about mortgage life insurance versus personal life insurance. We want to make sure that everyone who is here understands that we are looking to provide value and give you information that is crucial for you to make important decisions, as well as reminding you that we're not giving you any advice. We are sharing information and knowledge. So we are going to get Dwight on the line with us.
The summer's up. I'm watching the sun fly.
If anybody's on our live right now, by all means, wave hello. Oh my gosh, I've got JJG. Hello.
I'm not seeing it.
Hi, from the Dominican Republic.
For some reason, not seeing her.
Here we go. Dwight is online now. We are going to welcome him in. Here we go. He's online now. We are going to welcome him in.
All right. Took me a bit to get in here.
All right. Technology, the beauty of technology.
Yeah, I'm here.
So once again, welcome everyone. We are going to get started with our live. As we mentioned last week, and we mentioned every week, we want to make sure that you understand we will not go past 7:30. We want to keep it short and sweet. Bookmark the live so that you can come back to it and watch it. If you can't watch it in its entirety, again, there's lots of great information tonight. Tonight, Dwight and I are going to be talking about mortgage life insurance versus personal life insurance. And this is going to be a great one because it is one that is often confused and very much misunderstood in the market, right?
Mhm. Yeah.
So our purpose tonight is to share with you the difference between mortgage life insurance and personal life insurance, the keys that make it different, and share that with you. So without further ado, let's get started with Mr. Nicholson and share with us a little bit about mortgage life insurance and what it is.
Yes. So mortgage life insurance, right? Similar to its name, it's really an insurance that covers a mortgage in the event that the borrower, meaning you, if you are the one borrowing from a bank, in the event that you pass away, it's designed to pay off the mortgage. All right. It's generally part of a house purchase or property purchase where you're putting down maybe less than 5% or less than 10%. They tend to lump that into the mortgage as sort of a security safety net, simply because if you have less than the general amount that they request, which is about 20%, they generally consider you a little bit higher risk. So they add that mortgage insurance to ensure that if something does happen to you, they can minimize that risk by having the mortgage insurance pay off the mortgage in the event that you pass away.
Right. So when we are applying for our mortgage, this will be the very end of the application usually, and it usually asks, would you like to have life insurance? Would you like to have critical illness insurance? And if you answer yes, you need to move on further and answer a few questions with regards to having this insurance. So I think aside from that, the first thing that we want to share with everyone is that this life insurance is provided through your lender. Now, your lender may or may not have a life insurance division within their entity, but they essentially are saying, let us tie this to your mortgage, and in tying it to your mortgage, this makes your policy something which is called a declining coverage. So basically what that means is that as you pay down your mortgage, this life insurance is tied to that. Therefore, if something happens to me in year 7, 8, 9, 10, I've paid down my mortgage 30, 40, 50, $100,000 down maybe, then my family would be entitled to, well, first of all, we'll get to that, but essentially the lender would be paying off what I owe on the mortgage.
Yeah.
So it is directly tied to how much you owe to your lender.
Yes.
That's one, right?
Mhm.
Secondly, Dwight, can we talk about if you have anything more to add to that with regards to having it directly tied to your lender? How can we?
Yes. Go ahead. How can
I
we?
was gonna say, I was gonna say, if you have anything more to add to that. So it's directly tied to your lender.
Yes.
What would be the polar opposite of a personal life insurance versus that?
Yes, and you're touching on a very good point, right? So the major difference between having a life insurance policy, which is on you, versus a mortgage insurance is the beneficiary. Okay. It's, I should say, one of the reasons. So the beneficiary with a life insurance policy is who you deem as that person or loved one or family member, whoever you trust. You want to leave that money behind in the case of your death. You can designate who that individual is. With a mortgage insurance, the lender is the beneficiary, meaning the bank is the beneficiary, right? So a lot of people think, okay, something happens, you pass and you can't pay your mortgage. Yes, your mortgage is going to get paid, but the bank is going to still own that asset because they are the ones that are lending you the money for that property, right? So one of the things that you want to think about with having a mortgage insurance is who do you want as the beneficiary, right? That's so you want to think of not just paying off the mortgage, but their additional costs. There are maybe cases where and you talk about the declining rate of that mortgage is you're paying a premium for the duration of your mortgage. And let's say something were to happen in year 11, year 12, 15, or whatever the case is, only what's left will be paid out, right? Only what's left of your mortgage would be paid out, right? So you'll be paying premiums for X amount for an extended period of time. You're essentially overpaying for that insurance, right? So that's one of the drawbacks or downsides of having that mortgage insurance is the bank is the beneficiary versus with a life insurance, you can determine who that beneficiary is.
And I think that's huge, right? Because listen, sometimes there are individuals who they can take care of the cost of the mortgage. Sometimes there are partners where, the one partner who has not passed financially with their own pen, with their own income, can take care of the mortgage. So they have now, being the beneficiary of a personal life insurance, they have the option of being able to say, hey, you know what? I'm not going to pay off the mortgage. I can take care of that. I'd rather put my money into an investment, or I'd rather put this death benefit that is being paid out to me. Let's say my mortgage was 800, 900,000, and that's what was being paid out to myself. I'm going to put a little bit to bring down the mortgage so that things are easier for me on a month-to-month basis, but I'm going to put the other into a business, start up some investments, maybe purchase more property. There are some options that you don't have when you have your mortgage life insurance through your lender, right?
Yes, very good.
And I think that's huge. I think that's huge for people to understand because of course, we would want our mortgage to be paid off, but sometimes the situation doesn't necessarily require you to have that happen. And you now have flexibility, power of choice to be able to do different things and use that money in a way that can benefit your family further than just paying off the mortgage, right?
Yeah.
So we have declining coverage over time versus your coverage staying the same. We have that the beneficiary is in a mortgage life insurance is your lender versus you designating a beneficiary. I look at it as, hey, listen, they're giving me X amount of dollars, X amount of money for my mortgage for me to have this house, right? Obviously, I have to pay them back. They're essentially covering their own butt, right? They're not covering my butt. They're looking at what is in the best interest for them to get that money back somehow, right? Now, third, and this is one of the most important ones. And Dwight, I found an article online. You know, both you and I, we grew up in the school of listening to. I think we've seen the documentary many times. It's called CBC Marketplace.
Yes.
And it is about mortgage life insurance and the in-depth study of what happens with regards to the questions that are asked, families that have been denied over many years and so forth. But I found an article and I want to share it. And we can talk about this a little bit, but I want to share it. I'm not going to read all of it. It is an article that was in the Star 10 years ago, 2014, right? But I didn't go to the reference library to get an updated brand new article. But let's say this one here is a gentleman named Christopher Massa, who was diagnosed with lung cancer in October and subsequently passed away in February of the next year. Now, he had a mortgage life insurance that covered him for the entirety of the mortgage, which was $289,000. This mortgage life insurance claim was denied. He answered health questions on the application incorrectly. Okay, there's only 4 or 5 questions that you have to answer, but one of them was answered incorrectly. Therefore, the claim was denied. On top of that, on top of everything, not just that the claim was denied, they did end up getting $5,000 as a refund of their insurance premiums that were paid, which is nothing compared to having $289,000 paid. But on top of that, they were also going to be charged $12,000 for breaking their mortgage. Now, we are not mortgage specialists, so we can't talk about that. But this is what it, in the article, the story was $12,000 for breaking their mortgage. Now, what happened here was he had been tested and treated for a liver problem. And the bank learned of this after his death, because after his death is when they asked his doctor for medical records.
Right.
Because they wanted to see, were there any pre-existing health conditions that they should have known about that this person, quote unquote, lied about.
Right.
It says here, you have to say no to all conditions to be approved right away. And if you say yes, you may or may not get the insurance and it will take longer. But again, you and I know that when we read these questions, sometimes the terminology, the jargon is not clear, not specific. And you just answer no because, hey, did you have, this in the past 5 years, or have you ever? No. Or you don't think particularly as a client, you don't particularly think that what you had, you had a liver issue that was cleared up, let's say maybe 10 years ago, you don't think that it would affect you.
Right.
Right.
Yeah.
And so you maybe aren't lying. You answered as you thought you should, but you still got denied. And here's what I want to point out in the article as I go along here is a quote from the spouse. And basically, I want to point this out because this comes back to what we were talking about, Dwight. It comes back to the fact that we spoke about, is life insurance a scam? People talking about how life insurance doesn't pay. People talking about how, oh no, I know family members who they had life insurance and they made a claim and they never got covered. Well, the quote from the lady basically says, I'd like them to change the way they accept or deny the policy. They should have done their homework when we applied, so we could have gone somewhere else. They
Yes.
let us believe we had life insurance, only to find out we didn't when it was
Mhm.
too late. Now,
Yes.
listen, we're not defending XYZ banks or anything like that, but at the end of the day, that's not their business, right? Like they're not in the business of, let's put it this way, they are not in the business of sitting down and explaining to you and going over, the pros and cons and why you should have your personal life insurance protection versus a mortgage life insurance protection. A lot of the times, the individuals that you're sitting with, they're just putting through paperwork, right? Like they need you to get off of their desk so they can get the next person in, the next person here, answer these questions. And a
Mhm.
lot of the times they themselves, the employees themselves, don't know the difference.
Right.
And they just understand what is written there. It's like, well, would you like mortgage life insurance? Well, what would that do? Well, that'll cover you if you pass away. It'll cover your mortgage.
Right.
So they're just giving you the information that they know. They're not necessarily there to give you advice or help you talk you through, see the pros and cons. But that goes to talk about what we were talking about before, that a lot of times we see people who have gotten burned by this particular scenario like this, and then believe that it's all the same. And
Yes.
it's not.
Yeah.
It's not.
You raise a very good point, because I remember the first property that I bought. This is, back in 2008. When they talked about the mortgage insurance, it was a very short conversation, right?
Mm.
I'm like, what is the mortgage insurance for? They explained it's just to ensure that if you were to die, that the mortgage would get paid off, right? Now, in my head, I'm thinking, okay, the mortgage gets paid off and my wife keeps it, not realizing that, well, it's being paid off, but it's being paid to the lender, which is the bank, right? So it's going to go back to them, right? So yeah, and there wasn't much conversation, there wasn't much education, which I can understand why you have articles like this, and why she's saying what she's saying is take time to explain how these things work when you're getting them set up, so people
Mhm.
know exactly what they have, right? Because I can just imagine, like, let's say they have the house amortized for 20, let's say 25 years. And in the 24th year, something happens and they um, submit their claim and the mortgage insurance doesn't pay out. Like, what do you tell them? They've been paying hundreds of dollars a month into this thing for 20 plus years. And
Mhm.
then to not have it pay out, I totally get it.
No, 100%. I get it. I understand it too. I think personally, I agree with her that there should be some education, some sort of, or there should be a line, I think, in bold there that
Mhm.
says the very last point, which for me is the deal breaker. When I speak to clients and I ask them as we're sitting down, you know how we do this. We go through a financial needs analysis, we review from A to Z. And this is why sometimes I explain to families that I sit with, I'm here to go from A to Z, because that way we can find out what's really happening
Right.
financially, what you're really paying for. Because a lot of the times they don't necessarily know or remember that they're paying for mortgage life insurance through their lender. So when we sit down, we do a full review. We ask, what's your mortgage? How much are you paying? How much do you owe? Do you have mortgage life insurance? In which case, some families have come back and said, well, I actually don't know what I'm paying for.
Yeah.
So, hey, let's go get your paperwork. Let's take a look. Let's see, what are you paying for? And sure enough, as their statement comes through every year, some families that I've sat with said, oh, yeah, I am paying. That's how much a month they're taking out for mortgage life insurance. And
Mhm.
the big, bold statement that should say there for families to understand and to make an educated decision is the biggest deal breaker for me, which is post-claim underwriting.
Yes. Talk to it.
Right?
Talk to
Post-claim underwriting should
Mhm.
be the big in bold here, that if you are going to take this as your life insurance, as your protection that you
Mhm.
potentially would need to use in the event of a death, in the event of a critical illness, if you choose the critical illness option as well,
Yeah.
you need to understand that they're not going to qualify you up front, they're going to qualify you after a claim.
Yes.
It's like,
Mhm.
It's like me going in, I don't know, I wear glasses. So it's like me going into, and you wear glasses. So it's like I'm going to the eye doctor,
Yes.
right? And it's like, here, just choose this one and just choose any one. But
Mhm.
I haven't had my eyes checked. I
Right.
don't know what prescription I need to, and it's not until I walk outside with the wrong prescription
Right.
with bifocals and that I don't need,
Yeah.
and I walk into a wall that I realize, oh shoot, that's not what I actually needed.
Yeah.
Right?
Yeah. Yeah.
So the biggest deal breaker for me, and I mean you're saying it yourself too, I see you nodding, is that post-claim underwriting, is
Yeah.
that we won't know until after a claim goes through
Yeah.
that the mortgage life insurance is accepted or denied.
I did a test, and in all sincerity and all honesty, I did a test last month. Okay, I had a client who has had a mortgage insurance for, they've been paying into it for, I think, about 20 years, and that's kind of where that idea came from. And they wanted to know, is it worth it, right? I called the mortgage insurance company. I'm not going to say who they are, right? Again,
Right.
don't want to be, don't want to be blacklisted here. I called them 2 separate times. I spoke to 2 separate people because I wanted to make sure that I was getting the right answer. And both of them confirmed that, yes, exactly what you said. There are probably 5 questions that are asked when you're getting mortgage insurance. However, the underwriting is done once a claim is submitted. And if they find something in there in your health history that doesn't align with their contract, they will not pay out. Right. In fact, statistically, more mortgage insurance policies are not paid out versus are paid out. Right.
Mm-hmm.
So when you think about, when people say, life insurance is a scam, right? And as I mentioned in one of our prior lives, is I understand where people are coming from. It's because they're not educated. They don't understand how this stuff works, right?
I
So
think they're all the same.
they think they're all the same, right? And so when it's time to actually exercise a claim, if that's when they're going to do their, like you said, dot their I's, cross their T's, do all their due diligence at that point, that means you're leaving it to chance that it will be fine and that it's going to pay out. And it really hurts if you've paid into this thing all these years and it doesn't pay out.
100%. I ask clients when we sit down, and some of them have actually said, well, and this is the mentality, which, I mean, maybe we can do a whole section of lives in October, in October, about let's normalize and get rid of certain scenarios, certain ways that we think in society. But the mentality for this family that I sat down with was, well, I've already paid into it so many years, so I'd rather just keep it. And when I said one sentence to them, they said, okay, let's see how much it is if I get my own. And that sentence was, well, do you want to keep paying for a false sense of security?
Wow. Wow.
Would you like to keep paying for a false sense of security? If so, that's your decision. You're well within your right. You're an adult. We'll write it down in our notes, and we'll make sure that you answer to that, yes or no. But if that's the case, then that's what you're paying for, a false sense of security, because of that main factor. I don't want the bank to be my beneficiary. I don't want to have my payout be less and less as I pay down my mortgage. But more than anything, I don't want the underwriting to happen after the fact, right? So tell us a little bit. I mean, let's talk about, before we end up with a personal life insurance policy, what is the flow? What's the flow of a personal life insurance policy versus, we've talked about mortgage life insurance policy, how you qualify or don't qualify for that. What's the flow of a personal life insurance policy?
Yeah, personal is fairly simple, right? I mean, there are some questions that will be asked of your health. Obviously, it's based on your age as well. based on the type of insurance that you're buying, if it's a term, if it's permanent. Those factors will affect the premium. But the general process is once you submit, it goes through underwriting. So everything is done upfront. In some cases, the underwriters would check what's called a MIB, which is your Medical Information Bureau. They would see what sort of health history you've had. And an important point here, every doctor's appointment that you have, that information is updated into system, right? And that system is essentially what the insurance companies will refer to. It may be through an APS, requesting an APS, which is, sending to the doctor, hey, we want to get this more detailed information. But everything is done upfront. So that way, once you are approved, that contract says, if for whatever reason you were to pass, all you need is the death certificate from either the coroner, from the hospital, and you bring that to the insurance company. They would then, process internally, generally within, let's say, 24 to 48 hours, right? Maybe 72, depending on if there's anything they need to double check. The likelihood of you getting that payout is fairly quickly, right?
Yeah.
So it's a better way to get the proceeds or the death benefit versus, with the mortgage insurance, again, that money's not coming to you. That money is going to the bank.
Yeah, exactly. So the process is a lot more in depth with a personal life insurance policy. When you start with it, Dwight was talking about how you are asked a series of questions. This isn't 5 questions. This is a good 30 to 35 questions.
Yes.
And from these questions, some of the questions sound redundant, like they're asking it again, but they're doing it because they're trying to trigger our memory to see if there's anything else that we can think of, which we always tell everybody is like, listen, even if you broke a toe, let's talk about how you broke that toe and where did you go and what medication you were given, because it's important to put it all in. So there's no surprises, right? And that APS is an attending physician statement where they can speak directly to your doctor. And in some cases, depending on how much insurance you are asking for, because you don't have to ask just for how much you owe on your mortgage, because this is your own personal life insurance. You could determine that you need more than just the mortgage amount. So in some cases, depending on how much you're asking for, you'll actually have a medical report, right? Why wouldn't, see, look at the outrage. Why wouldn't you want the money to go directly to their family and not just the mortgage, right? Yeah, for sure. Why wouldn't you want your family to take care of it, and so that in some cases there's a medical that needs to be done, in which a nurse will come to your home, take your vitals, take your blood sample, your urine sample, your blood pressure, all of that stuff, ask you all of the questions as well, the series of questions, and it is taken care of up front, right? Now, when we have a personal life insurance policy, we also explain to families that there's the first 2 years. So share with us the first 2-year period, Dwight, how we explain that to families.
Yes. So the first 2 years, there is what's called a contestability period, right? That is, all that means is, let's say you were to submit a claim within the first 2 years. And submitting a claim could be, we're talking critical illness here, where you're still alive. They will check, well, I guess in both life as well, they will check to see if you've lied on your application. Okay, so if there's something that seems a little fishy, they can contest it. That's why they call it a 2-year contestability period. So to Val's point, you want to make sure that you're not lying in your application, right? So I encourage clients to always tell the truth up front, because again, this is something you're going to be paying into. You don't want to be paying into this, again, with that false sense of security, knowing that it may not pay out, right? The second part to the 2-year contestability is if you were to commit suicide in the first 2 years, there's a high chance the policy will not pay out, right? And it's It's strictly for fraud's sake, right? Because I think this came about where, if you're smart, you're like, okay, I want to, maybe my family's better off without me being here, right? So you go open up a insurance policy, knowing fully well, okay, tomorrow I'm going to take my life, so the policy can pay out. So the insurance company said, none of that. Okay.
No, none of that. Funny.
None of that. Right. So you need to be alive first 2 years. If there is suicide within those 2 years, they can contest it, which means they can deny it, which means they are allowed to not pay it out.
Right. It's just to make sure, because this is just how it is, right? It's to make sure that you're not, life insurance is not supposed to be to get rich quick.
Yes.
And so it's supposed to be to protect a responsibility, to protect your family, to give something in the event that we pass too soon, to take care of that, right? So that's why those are there, and those should be explained to you when you're setting up a policy. You should know the first 2 years what it entails. But yeah, let's wrap it up tonight. I think we got excited because, listen, there is just one comment in the quotes here. It says the lenders definitely don't explain any of this.
Right.
And they don't. They definitely don't explain any of this. They don't explain to you the main differences between having your own personal life insurance and your mortgage life insurance. Some mortgage brokers do know this, though. So I want to shout out some of the mortgage brokers that are out there that do a great job, because they don't necessarily know the ins and outs, the details, because they don't deal with life insurance, but they do know, hey, listen, you need to speak to someone about life insurance before you say yes to this.
Yes.
Right? And that's I want to shout out to some of our mortgage brokers who are out there and know that there is a big difference, and encourage you to speak to someone like myself or Dwight to sit down and know the information before you go ahead and say, yes, I want to say yes to these, right?
Yeah.
So that being said, ladies and gents, again, we are not giving advice. You will make the final call, the final decision on what it is that you move forward with, but we're here to show you the differences between the two, and hopefully you can take that education and make a choice. If you need any help, we're always here, ready and willing to help and educate and give you the information that's needed, myself and Dwight. And we are going to move on. We're going to have our next live on Monday, and that we're going to be talking about critical illness. So critical illness is going to be on Monday. That is our second last live for the month of September for Liam. I hope you've been enjoying this. Dwight, always a pleasure, always a fun time.
Likewise.
All right, friends, have a great one. Make sure you replay, share this live with someone that you know, because it could truly be a huge difference for them.
Yes. Have a good night, everyone.
Good night.